Good evening, Ross McInnes from Australian Investment Research Services. Hope you're well. Thanks for joining us as well. Another interesting day on global financial markets after the US holiday and UK holiday last night. We've seen another spike in volatility this afternoon as we went into the European trading session. This was driven again by as per the last month, the fears about Europe's debt levels, and in particular this time it was Italy's turn to be attacked through the CDS market, the credit default swap market, which blew out from 200 points to 250 points, and again demonstrating that these markets aren't efficient and aren't obviously very liquid from day-to-day moves like that, which is a 40% change in the valuation. In response, the Euro USD rate fell to new 4-year lows at 121.10, just below the 121.20 level set this time last week. And also what bounced through that is the Australian dollar came with it. Started the day at 84.70, the market went short in the RBA meeting, got down to 83.80, expecting the RBA to be more dovish or softer in its tone. The market didn't quite get what it was looking for in that respect. The RBA did cover the European crisis in a lot of detail, but did suggest that at this point they thought world growth and demand was going to be okay, and still saw GDP above trend levels through 2010-11. The overall point of the RBA meeting, though, was that they're on hold now probably for the next 90 days at least, and obviously going to depend on how equity markets and bond markets perform over the next couple of months. On that point, the Australian equity market did close lower today, under that 4,400 pivot level. It's been in and out of the market over the last fortnight. Interesting that later tonight we've also had Rio release its latest release against the Rudd government's new resource tax, and stating that really it had contributed to overall taxation at a very high level, and saying its effective tax rate was around 35%, which seems a fair level given what other tax rates are across the world. So that debate will continue, obviously. In the night ahead, we have some pretty crucial US ISM manufacturing indexes which come out. The focus there, as per the next 2 months, is going to be on whether there's any signs of any European impacts, with the market looking at 59 versus 60.4 in the previous month. But note that this series is at sort of 4-year high, so we have seen a pretty steady recovery in the States in the last 3 or 4 months. And this leads us into tomorrow with the Australian March quarter GDP numbers. Probably need a number above 0.6%, which seems to be the median forecast by the market at this point, to get the Australian dollar some extra support at the moment. Key overnight for the Aussie dollar is going to be, through the New York session, will be that 82.50 to 82.80 level, and on the top side 83.50. The market's at the moment around 83.25. It's bounced up a little bit, but obviously waiting for the US Open in about 3/4 an hour time. And so we'll see you in the morning. Thanks very much. Bye bye.